Welcome to the Focus on Why podcast. I'm Amy Rowlandson and I ask my guests one simple question. Why? Focusing on the importance of why, I share with you the relatable, uplifting and inspiring conversations I have with people from all walks of life. This podcast will encourage you to focus on your why to enable and empower you to achieve the success you desire. Have a purpose, have a plan, focus on why. Welcome to the Focus on Why podcast. Very nice to have you. And Sir Badminton of Bitcoin, welcome.
Thank you very much.
Or also known as Hodler Than Thou.
Indeed.
And also known as Badders.
Yeah, let's be casual about it.
So let's explain what this all means to everyone, please.
My handle, my handle itself refers to my past as a holier than thou sort of metropolitan lefty, which I'm still trying to recover from. And the hodler is a sort of term that we use within the Bitcoin space for somebody who holds Bitcoin, who is not in the market for selling.
And the hodler came about as a misspelling once, didn't it?
Quite right. There was a Reddit post where somebody spelled it wrong, and it's just stuck.
I love that. It got adopted.
Yeah.
Brilliant. So Bitcoin. Why Bitcoin?
Why Bitcoin? It's a very good, very long-winded question. Basically, there are several reasons why. We are entering the 21st century with a money that came about in the 16th century and a financial and banking system that is from the early 20th century. Most of the code, or all of the code in fact, I think within the financial and banking world is still something that originated in the 40s and 50s. And yeah, so it's time for an internet money that is borderless, frictionless, censorship-resistant, that is unseizable, that is immutable, and permissionless, and one that facilitates and improves trade globally for both individuals and societies as a whole. I don't think Bitcoin of as much as an investment as I think of it as a tool to further our societies and the human race. And of course that sounds possibly hyperbolic for people that haven't looked into Bitcoin, but it really is an improvement on money as we know it. It is an evolution and it is inevitable as far as I see it.
So it's interesting that you're talking about the history and that we're using a currency or using a financial system that was originated probably hundreds of years ago, but last improved in the 40s, 50s.
Yeah. I mean, it has been changed all along, little by little. I mean, I like to try, I'm not always successful, but I like to try to mimic some of the great inquisitive minds by using first principles to kind of get to some truths. And one of the reasons I love the premise of your show, because why is the most educative question. And first principles is about never really stopping asking that question. So for each layer you unravel, you keep on asking the question and you dive deeper and deeper in. So you could say, we could talk about why we have this sort of need for a different type of money, and then we can delve a bit further back after that. So there are several different ways why we need, or several different reasons why we need a new money. One of the main reasons in my mind is that it basically excludes a lot of the world. I think we are counting close to 2 billion people that don't even have a bank account, that are completely unbanked. Bringing those people into a financial system will obviously add a huge net good to the world. But also there is an issue of surveillance. This is not often talked about in terms of money, but and some people that listen to this, they might question this and go, "Oh, this is a bit tin hat or whatever." But try looking at it through the prism of being in another country than where you are right now. If you're in a Western privileged sort of society. Try to think of this through the prism of being in South America, for example, Venezuela, Chile, Argentina, where there, loads of places where there are currency devaluations all the time, oppressive governments. You can come closer to home. I mean, look at what's been happening in Hong Kong over the past year or two, where through their monetary or through their financial system, they've been able to basically sort of deplatform, I suppose, if you think of the financial system as a platform, deplatform dissenting voices very easily by cutting off access to their money. You get closer to home again. Turkey, bring it back even closer. The Catalan Independence Party or independence movement. This sort of really strong-armed ways in which the Spanish government, they are able to surveil and control what they see as dissenting voices. Think forward to what might happen if the Scottish devolution movement gains strength. Will a UK government sort of just let that happen? Will they try to control it in the ways that they can through various forms of surveillance? So how does this surveillance take place? I mean, there are three main ways in which it happens. One is that they can gauge and surveil your network, who you're interacting with, financially, all of these sort of things. They can see the contents of your purchases. And finally, and this is something that a lot of people don't think about, is your geographical location. And for me, that is, as an idealist, penalizing democratic expression should never be possible, whether that is through control of money or anything else. But sadly, this is possible right now. So we only have a fairly short time to cover a lot of subjects, individual subjects under the Bitcoin header. So I shall stop there. There are probably going to be really crucial things I'm leaving out, but you could possibly do a whole show on this just on its own. What are some of the other ways in which money is not working for us anymore? Inflation. We are told that we are aiming for a sort of 2.2 or 2% inflation rate per year, and that is a good thing for the economy because it stimulates the economy and all these sorts of things. In my optics, I see that as primarily working for the government. Any government that's laden with debt, this works for them. A lot of libertarians, though I don't subscribe to any ism per se, a lot of libertarians consider inflation theft, and I can see why people they think that. I mean, 2% in a year. I think in real terms it's a lot more than 2%, but 2% is what the CPI is telling us. Other much more educated financial and economic minds would tell you that the CPI is manipulated in its own ways. They choose areas of the economy to feature in the CPI that suit their particular end result, if you like. But let's ignore that for the minute, because over 10 years, if you consider 2% what is happening, over 10 years, that is all of a sudden 20%. So what do you do in a 0% or negative interest economy? How do you go about alleviating the problem of your money being devalued all the time as a saver, as an investor? And you're forced to find ways of outperforming inflation, which in turn leads to lots of malinvestments. There's a risk to every investment you make. Not everyone can be as educated about investing as what is ideal. And most investors, they have a full-time job at the same time. I mean, so all of a sudden you're expected to be a property expert or an equities expert or a commodities expert or something alongside of your job as a school teacher or as a brain surgeon, or things that take lots of your time. Malinvestments aren't good for the economy long term, but also it leads to asset bubbles. You know, most people, they don't think about why it is that their property keeps on going up in value. They see it in nominal terms and they think that that's money in their pocket. They don't think that about the purchasing power they have lost in the same amount of time that their property has been going up. But asset bubbles in real estate and equities, loads of other sectors, they happen because people are forced to put their money into places where it will perform better than the money that they are losing. But of course, that creates, or is part of creating, inequality and all sorts of other issues. And also bubbles leads to busts, and that is also not good for individuals and others. I'm sure that most property investors, I have a property portfolio myself, if I was still getting, I'm too young to remember, sort of 10-12% savings rates, but if you were getting that, would I be in property at all? I don't think so, because ideally, or as an idealist, I don't really like the thought of investing in something that is a sort of human basic need. But anyway, I'm sure we'll come back to that further on. And I'm going to hopefully trigger a few people here, because I'm trying to be provocative now, but I do think Bitcoin has the propensity over the next 10 to 20 years to basically gobble up a lot of value that is currently in real estate, that is currently in equities and all sorts of other places. Because ultimately people, they want the fastest horse. These last 11 years, Bitcoin has by far been the fastest horse, and I think it will continue to be so for a very long time. But anyway, we can come back to that.
Yeah, I think probably the best thing to do right now is just to go, what is Bitcoin? Mm-hmm. Let's do a sort of a dummy's guide, sure, should we say?
Well, I'll give a very quick explanation, which is that Bitcoin is a peer-to-peer digital money. If people are not familiar with P2P technology, it is basically a digital transfer of binary information between two parties without the need for a trusted third party. We have seen this. We've seen P2P technology revolutionize the music industry, of which I was a part for many years. So it is a decentralized framework for exchanging value. The way that technically works, and I want to go back to looking at why is it we have a need for money in the first place, how has that come about? But the way that it works is that you have a protocol, which is Bitcoin, and then you have a token on the protocol, which is also called Bitcoin. You can think of it a little bit maybe as the vine, which is the protocol, and the grapes as Bitcoin, the token, perhaps. And this is a protocol that is set in stone. It's a consensus mechanism. So everyone that runs this particular protocol are agreeing to the social consensus rules, of which there are a number. So there are lots of different nodes within the network. I think we're in the six figures now globally. Every node, I have one over in the corner there with a blue light running the protocol that we're talking about. And in order for anything to change within the protocol, every node in the entire system has to run and change and run the same or upgrade to a new protocol around the same time for it to ever happen. So this means that it's incredibly difficult to change anything on the protocol. And it's incredibly difficult, well, it's impossible to hack. So when people talk about Bitcoin has been hacked or whatever, Bitcoin, the network, has never ever been hacked. It's unhackable. I mean, even with quantum computing and all these sort of things, I believe you need to crack more decimals than there are atoms in the universe to be able to crack it. So it's incredibly, incredibly safe and decentralized. We'll get to the FUD, fear, uncertainty, doubt questions maybe later on, and the whole hacking issue is one of them. And so Bitcoin is, the token is hard capped at 21 million. At the moment the supply is 18.5, roughly speaking, million. And the emission schedule is hard-coded in as well, which makes it the hardest money we've ever seen. In fact, after this last halving, which I might touch on in a second what is, Bitcoin is now as hard as gold, meaning it's as difficult to mine, it's as difficult to produce as gold. And of course, historically, gold has always been base money. Well, not always, but for at least 5,000 years. And this hard cap is something that is baked into the protocol. So whereas a government, as we have seen now during Corona and as we saw during the 2008 crisis, if all of a sudden there is a political will to print more money, put more money into circulation, it happens as easily as it is to update a spreadsheet. All they do is put another value into their ledger, and they have more money on their balance sheet, meaning that they can now buy more treasuries, whatever. With Bitcoin, there will only ever be 21 million, meaning that as more money enters the system, the value of Bitcoin only goes up. So it's deflationary in that sort of way. And it's something that is difficult to get your head around at first, but purely by holding Bitcoin over the long term, because obviously, as many people will be aware of, at the moment it's very volatile, and both up and down, but luckily mainly upwards. And so by purely holding Bitcoin, you will make money in the long term. Whereas by holding fiat, as the sort of expression or name is for sort of nation-state currencies, you only ever really lose money with inflation. So in that sense, it's already a better system. It's unmanipulatable because the code can't be changed, the protocol can't be changed, and it gains value over time rather than losing money. There are a lot of technical questions that, you could spend a whole episode on consensus rules. Some of the studies I do are exactly like that. But think of the Bitcoin network as TCP/IP. What TCP/IP is to the internet. It's the entire framework that we've built the internet on. I mean, who do you know that knows about TCP/IP, let alone the intricate workings of it? There's just no need. But Bitcoin now has 11 years of Lindy effect, and it has only gone from strength to strength in that time.
So what percentage of the globe actually hold Bitcoin right now?
Well, that is very, very difficult to say, but I wouldn't hazard a guess, but it's very low. We're certainly we're certainly low one digits, if that. And so we are incredibly early still. I mean, we're probably like where we were at in 1994 for the internet. The framework is there, the early businesses are there, but there is a lot of growth still to happen. However, Bitcoin, like the internet, is a network effect. And we will see changes happen at an exponential rate. And we will see adoption at an exponential rate. And based on the current macro, and this is something we didn't cover in Why Bitcoin, I mean, with the current macro, anything is possible. It is so volatile out there. It's so unpredictable. You know, the Federal Reserve having printed trillions of dollars, in fact, printed more money in June alone than they did in the 200 years before the Federal Reserve. So more credit creation or whatever. Certain other things have changed. Just to quickly stay on that for a bit, the Federal Reserve now have no reserve requirement anymore. So where in the past they've had to hold some kind of reserve for the deposits that they're getting, now there's no reserve requirement at all. Again, if people, they have a tendency to, I'm not saying your listeners, because I'm sure they're much more sophisticated on that, but people have a tendency to forget even recent history. I mean, what happened in Greece in 2012, where all of a sudden all savers were bailed in, or the economy was bailed in. We'll have your savings, thank you, to save the economy. And yet another reason why it's important to hold an unseizable, unconfiscatable, whatever asset, particularly one that will carry on to go up in value as we go through the years.
So you talk about exponential adoption. How are people going to become sort of educated in the Bitcoin? How are they going to be comfortable to adopt it as their main currency? Or you're talking about holding, but this is actually putting it into a use, a daily use.
Sure. I mean, this is a very good question and a very useful one to think about. This is the first time in probably 5,000 years when we've seen a free market money monetize in real time. I'm just going to let that sink in for a second. I mean, that's a pretty astonishing development. And of course it's going to be volatile to begin with, because there are no clear price signals, because it's so early. This is also why it's an incredibly exciting time to get involved, because the returns are asymmetrical to the sort of money that you might invest. I said I don't consider it an investment, but the money that you might put in.
And when you say asymmetrical, you're saying disproportionate to the amount of risk and the...
Oh, it's like never seen before. I think it's the biggest asymmetrical bet that we will, well, certainly in our lifetime. Much bigger than the internet. I mean, this is akin to buying real estate in Manhattan in the 17th century or something. You know, like just after Columbus came over. I mean, this is buying digital real estate for the future. There's never going to be more of it. Of course, that brings some risk, but I think it's important to realize that, as I said, there's 11 years of Lindy now. Lindy effect, meaning that with the more time passes, the more the network strengthens. And the macro has changed a lot in that time. The framework has changed a lot in that time. A lot of the sort of very early little niggles that were with the code or whatever have been ironed out. I mean, and there are finally in these last couple of years a lot of big macro names that have twigged what's going on. You know, Buffett famously called it, or was it Charlie Munger famously called it a Bitcoin rat poison. But you know, I wouldn't particularly take a 90-year-old's opinion on technology, particularly one who's never made their investments in technology because they have admitted to not really getting it. But Paul Tudor Jones now, possibly the most famous and most successful macro investor of all time, has just bought 200 million worth of Bitcoin because he has twigged that it is, not only is it a sort of smuck insurance, it's an option on the future, and also I think it's an inevitability, to be honest with you. I've now spent at least 6,000 hours studying Bitcoin and all the associated subjects like distributed systems, history of money, game theory, etc., etc. And I just can't see a world where we're going to have autonomous cars, where longevity scientists are telling us that we will, within very short amount of time, we'll be able to live till several hundred years old. And we're still going to have a paper money that is tied to absolutely nothing. I mean, that seems more ludicrous than thinking we could have a money that exists on the internet. And just thinking about there's a very interesting book by Neil Howe called The Fourth Turning, which basically analyzes the world in cycles. And another book called The Sovereign Individual that is looking at the sort of super cycles. So they're looking at, because we tend to look at the economy and our society in sort of 8 to 10 year business cycles. But macro investors really look much deeper than that. So they're looking at the longest, sort of 80 to 100 year business cycle. Or there's even a thought that there is such a thing as a 500 year super cycle that defines ages, if you know what I mean. And from everything I can read, it stands to reason that we're entering one of these new super cycles. We've had the sort of age of industrialization for a long time, and we are now on the maybe early stages of the information age. Interestingly, that will probably be defined by COVID as a sort of crossing, and the changes, good and bad, that will lead to. And I really believe that with a frictionless global money, it will usher in a new renaissance. And there's a meme within the Bitcoin space that says Bitcoin fixes this. And it's used for pretty much everything. But honestly, when I apply first principles to any issue, whether it's inequality or the environment or whatever, it just comes back in my mind. And I will hold my hands up and admit that I am sort of heavily invested in terms of intellectual capital now. I've basically dedicated my life to my 2-year-old son and to Bitcoin, because I think it's the only way that I can help facilitate change at all. Voting, all of these things, I just now see as ultimately futile, because whatever party you're voting for, their policies and politics are still based on a insidiously felonious monetary policy that benefits those closest to the spigot of money. So it's those closest to money creation that gets the benefit of the money early on. You know, the primary dealers, all of these sort of industries. And by the time that filters down to you and I, the purchasing power of that money has already lessened considerably. So this is a long-winded way of saying all of these things that in my mind create or is the foundation of some of the problems we have, or a lot of the problems we have in society, can be alleviated by entering a Bitcoin economy. I don't want anybody to take my word for it, because I appealed to authority for way too long in my sort of adult life, where I would trust certain publications or certain academics, and now I realize I was foolish to do so, because as soon as I started not trusting and verifying, which is another meme in the Bitcoin space, is to, I think maybe it was actually Reagan who came out with that originally, but is to don't trust, verify. Don't just take my word for it. If you at all think that that this resonates with you in any sort of way, commence your own journey. But it doesn't have to be one that takes you 6,000 hours down the rabbit hole, because most people, I've been privileged enough to retire in my early 30s. I don't expect people to have the sort of time to invest that I've had, but certainly open up your mind to Bitcoin as the first port of call. And then maybe, as Nicholas Nassim Taleb says, maybe get a bit of skin in the game, as in maybe have a small exposure, just because it incentivizes curiosity, it incentivizes learning. And I would actually go as far as to say that it is riskier now, given the 11 years of history, the 11 years of Lindy and Bitcoin, given the current macro. I mean, will equities continue to pump forever? As far as I see it, they've only continued to pump with the printing that's been happening. It seems inevitable to me that there's going to be an almighty crash at some point. Where do you want your money then? Yeah, you can have it in property, but I think that that's a bubble of its own as well. For me, it's short term, have some exposure to the dollar maybe, because I think we're still in a deflationary moment there. And obviously, but the trick is to get shot of that before it turns into an inflationary moment. But I would say primarily gold and Bitcoin. Any family office, any hedge fund, any private investor should have at least, I'd say, get off zero as the very first step. A 1% exposure, I mean, that has all the asymmetric benefits that you could possibly wish for in a portfolio. That 1% exposure could outperform your entire portfolio over the next 5 to 10 years. In fact, I think it's inevitable that it will, but again, that's just based on my own research. But if you were to lose half of that value, or even all of it, let's say, I can't see Bitcoin ever going to zero anymore. I think those days are well and truly gone. But I mean, a 1% reduction in your portfolio is negligible. But think about the asymmetric benefits of that 1% exposure. I've gone as far as to, I'm trying to liquidate my property portfolio now to expose myself even further to Bitcoin. I would say I probably have about a 35% exposure of my net wealth. And it's made me realize just how illiquid property is. I mean, if you really need to get rid of it, it's very difficult to. But yes. I feel like that was a real rant. I probably went away from your original point there.
That's fine. No, it's fine. I think something you mentioned right at the beginning about people not having access to a bank account. What was the number you said there?
I think the last thing I've seen is somewhere between 1.7 and 2.2 billion people.
And you said that it would have a net it'd be net good if they did have access to a bank account. So if they haven't got access to a bank account, what's the likelihood they're going to have an access to Bitcoin at some point in the future?
Well, it's huge for several reasons. I mean, already in Africa, people may or may not be aware, but already in Africa, mobile pay is really widespread. So people without a bank account, they can transfer value to each other. So all you need is a phone. All you need is a phone and an internet connection. And then people might say, well, maybe everyone doesn't. Everyone doesn't have a phone. With the deflationary ways of technology, that will very soon change if that is at all the case. I think most people will, with certainly one within a family. And that's another thing, like the deflationary nature of technology and network effects. Technology is a network effect. Jeff Booth, in his book The Price of Tomorrow, which I recommend as one of my 4 books to Enlightenment, talks about exponentiality and how we find it almost impossible to comprehend as humans. And he uses the example of a piece of paper. So if you can only fold a normal piece of A4 paper about 7 times, but if you could fold it 50 times, how tall a stack would it make? And most people will say, I don't know, 5 inches, 10 inches, maybe a foot, I don't know. Fold 50 is from here to the sun, which is just mind-boggling. And this is how technology operates in the same way. And we are on about fold 35 at the minute, technologically speaking, which I think is something like the distance from Chicago to Florida, something like that. So the next step we're going to take is going to be double that distance. So just because people don't have phones right now in the most minuscule African villages or in the depths of Nepal or whatever, it doesn't mean that they won't have tomorrow. That's the first thing. So how do they get onto the Bitcoin network? Well, all they need is a mobile phone and a Bitcoin wallet, which is a downloadable app. And all of a sudden, they are free to trade, theoretically, globally.
So I guess that links into the questions earlier about the sort of fear, the uncertainty and the doubt. If it's all on your phone, how safe is that?
Okay, so there are many different ways, and this is coming down to the sort of practicalities of Bitcoin. There's something called a soft wallet and something called a hard wallet. Now, a soft wallet is something you can have on your phone or your computer. They are fine for your sort of daily walking around money, and in fact, they're pretty damn safe. But I like to consider my node combined with my hardware wallet as my own central bank. It's completely autonomous, completely safe. Now, because I mean, my hardware wallet is offline, so that's completely untamperable with, if that's even a word. Now, a soft wallet is not as safe as that, but it's pretty safe. And what happens is you download a software wallet, you get what's called a seed phrase, which is a 12 or 24 word passphrase that will, in case you lose your phone, in case your app corrupts, in case your phone gets stolen, whatever. It is a way that you can download that app again and retrieve your wallet with all your funds intact. Now, there is some good housekeeping or some good sort of rules of thumb to stick to when you have your money on a sort of internet accessible device, and that is to, do as little with it on public internet connections as possible. Use trusted Wi-Fi's, because you mitigate or minimize the risk of you being tampered with. But the better option, and as I have as I said, possibly more than a third, depending on the Bitcoin ticker price today, more than a third of my net value, I have to think about security in a different way than if I had invested 500 quid that was sitting on a mobile wallet. So I have a hardware wallet, which is basically a USB type of device that is completely impervious to any kind of outside tomfoolery, and you can keep in your safe, or you can keep in another country or whatever. I also have what's called a multi-sig system, which is, again, all of this, if you haven't been exposed to this, even setting up a hardware wallet or a software wallet can seem intimidating. When you get down to it, it's no more difficult than any other app that you will set up, whether that's your HMRC code generator or your internet banking or whatever. In fact, I got a new internet banking app the other day. It took me more than an hour to set up. I watched my 80-year-old friend the other day buy Bitcoin and set up a software wallet in no more than 15 minutes. So don't be intimidated. But I've gone the extra step, and I have a multi-sig system, which means that you have 5 hardware wallets and you need 3 of them to sign off on any transaction. I then have them dispersed over different geographical locations. Because I firmly see that this next cycle that we're entering now, in fact, I firmly see Bitcoin hitting before we get a blow off top, I think we will see somewhere between $200,000 and $400,000 per Bitcoin value. And currently we are trading at 11.2, I think, this morning. I don't know when this is going out, but you can see the asymmetrical returns on that. So when Bitcoin is all of a sudden several hundred thousand, and on the cycle beyond that, maybe a couple of million per Bitcoin, how do you want to? Bitcoin, self-custody of Bitcoin comes with immense personal responsibility, which is something we seem to have lost. Personal responsibility seems to have become a taboo sort of right-wing word, but I am firmly in the camp that I trust myself with my money more than I trust anyone else. But you don't have to do that. There are some very good trusted third parties that will custody your Bitcoin for you. If you don't feel like you are technologically savvy enough to enter the space, there are places like Gemini and Grayscale and some other different funds that will make it easy for you to invest your money and will custody your Bitcoin in a very, very safe and trusted way. So the barrier to entry is being lowered all the time. I would still recommend self-custody because that is kind of the ethos of Bitcoin in the first place, I think. But I understand that if we're going to see mass adoption, self-custody is not going to be for everyone.
So you talked about surveillance at the beginning and the importance of having that privacy, and hence why you're using sort of your names here because of the privacy. It's more than that, obviously, because you don't want to be, you're not going to be hacked, but it's just having that ability to be more private in your investments.
Yes, and it sounds slightly dichotomous because Bitcoin is on a transparent ledger. This is something I didn't touch on because there's so many things to say earlier when we talked about what is Bitcoin. But what is shared between all the different nodes within the network is a ledger of all transactions historically. And everyone holds the same copy. Everyone has their copy updated at the same time. So you could argue that Bitcoin isn't private at all because it is transparent. Now, there are some tools coming in, such as Taproot and other things that will make Bitcoin more private. You can coin join, which means that you can enter your Bitcoins into a mixer with other people's coins. You can take back a number of coins that weren't yours to begin with. There are ways of making it more private. But it is tied to a wallet. It isn't tied to an identity. And that is the big difference. So I, as an individual, can, if I was in Hong Kong, I could make my political feelings be known without being worried that they might tie my identity to my Bitcoin transactions. Now, eventually, with various forms of chain analysis, it might be possible. And if you leak too much personal information generally online, they might be able to deduct what wallet you're tied to. But no, it's a transparent ledger, which is important because as institutions, they get more and more involved. You don't want to see some of the same problems we've seen with gold and equities, and where things are being rehypothecated all the time. So they might issue several claims to the same equity or to the same bit of gold allocation. If you don't have transparency on layer one, you won't be able to verify all the time that no more Bitcoin is artificially created on paper than what is there in reserves. And this, while I'm on that, it's a slightly meandering conversation, but there's just so many things to talk about. The way money monetizes on the free market, the way a monetary good monetizes, is that it starts as a sort of a collectible, so a curiosity, which it would have been very, very early days when Bitcoin was a fraction of a cent and hardly anyone were mining. And then slowly that sort of starts changing and becomes a store of value. And I think we're very, very firmly within that epoch now, where we're doing we're in the middle of store of value, and people might find that difficult to believe with the volatility that we're still seeing, because after all, it was only the 12th of March that we saw Bitcoin go down to 4,000 with the general crash that we were seeing in equities as well, with the S&P 500, whatever, the Dow. But each year we have higher lows, historically. So that is the trend line to look at. And that will get even more, the volatility will contract, and it will be even more of a store of value. It will be globally considered a store of value. And not until that has happened can it become a medium of exchange properly and a unit of account. But the way that I see it, Bitcoin never has to leave store of value stage, because all that it has, the way that I consider Bitcoin is gold bars. Bitcoin in my mind is gold bars, certainly right now. It's base money. There can be another, to me it doesn't matter what the layer 2 money is. We had layer gold, and there were sort of other monetary metals like silver and copper that were layer 2 technology because that was the only small enough denominator to kind of be able to pay with. So if it becomes Libra, which you might have heard of, which is Facebook's cryptocurrency, or even if it becomes like Bank of England coin or ECB coin or IMF coin or whatever, Fed coin, whatever it might become, they can continue to play their monetary manipulation game if the base money underneath keeps rising in value, keeps being an impeccable store of value. I'm happy to cash out of my base money once in a while to gain some layer 2 money, whatever that shitcoin, as it's called in the space, a sort of nation state shitcoin it's going to be. That will work fine, because against that, Bitcoin, my gold bars, my digital gold bars, are going to be performing just outrageously well.
How do you stop sort of money laundering entering into the Bitcoin space?
This is a perfect sort of FUD question. The mainstream media will mainly write about how Bitcoin is used by money launderers and drug dealers, whatever. My answer is the criminal money of choice has always been the United States dollar. Wherever there's money, there's going to be a certain percentage of it which is operated sort of criminally. But for decades it's been suitcases worth of money being flown around the world or going offshore or whatever. It is no bigger problem than it is already. And in fact, with the blockchain itself being, well, immutable, so unchangeable, but also transparent, it will be much easier to try to track large criminal networks than it will through what we currently know as fiat cash money. So I don't see that being a problem at all. Certainly no more than it is now. And I think whatever money you have, you can never... crime is part of the human condition. It's always going to exist. And no matter of surveillance, whether that is financial surveillance or otherwise, will circumnavigate that or alleviate that. If we're going to see another renaissance, if we're going to see serious systemic change that will eventually be for the better, I think it's very plausible that we will also see some significant turmoil and volatility. I mean, we're already seeing it, aren't we? Another piece of FUD. People like to write about how Bitcoin uses more energy than Ireland or whatever it is, and for that reason alone, we can never use it. The truth, though, is that Bitcoin uses 80% renewable energy now.
And you talked about the super cycles and the big ages that we've gone through, and you're talking about the renaissance of this next age that's sort of not quite finished with the information age, but there is definitely a new one coming. And I've talked about this with other guests on the show, and from whatever industry or perspective they're coming from, they see it differently and see where it might be. It might be a compassionate age, it might be a collaborative age. But if you're saying that we're sort of a stage of fold 35 or 50, we're not that far off moving into this next super cycle, and we might even see it in our own lifetime.
I believe we will, yeah.
Yeah. Do you have a name for it?
Well, I think it's going to be the digital age.
Yeah.
I mean, we've had a taste for that. I think it's entirely likely that we will come to see the internet as not the vehicle for cat videos or online shopping or anything like that, but I think it's very realistic that as I said, I have a 2-year-old, that when he is my age, that he will look back on the internet and see Bitcoin as being the main use case of the internet. That the internet was born for this global, immutable, unhackable system. And it doesn't have to just be money that we put on the blockchain. It can be property documents or personal medical records or whatever. That we need to keep really safe. It can be loads of things, and I think we haven't even... Money is the base case for the Bitcoin blockchain. I don't consider any other cryptocurrency out there valid. But so money is the base case right now, but it will usher in all sorts of changes. It will rid us of all sorts of third-party control that we now have, And if you're spreading that information out over a hugely decentralized network, the safest, most decentralized network we've ever known to man, that really is a game changer and a disruptor for loads of industries.
So you mentioned right at the beginning that it's taken you 6,000 hours of investment to get to this point, and you had the luxury of having that time to spend the time on that, and also that it was a choice for you to be able to then invest the money that you've got in whichever ways you want, and to avoid those malinvestments. What would you say to someone at the starting point who is thinking, actually, a lot of what you've been saying today makes a lot of sense to me. Where would I go?
Well, it depends on how curious you are. It depends on how hungry you are for understanding the detail.
And I guess why you want to be doing this.
Exactly. What is your incentive? And again, you know, when we're talking about why Bitcoin, and we were talking about nation state surveillance, we're talking about inflation, we're talking about centralized manipulation of money, these sort of things. But another thing is what we in the space called number go up technology. I mean, it's fine to get involved for pure speculation. Most Bitcoiners get involved because of number go up. And yes, if you're in it for a short-term play, chances are that you could lose money, because short-term it could be volatile. But if you're in it for, and Bitcoin tends to work historically in 4-year cycles. If you are in it for at least a 4-year cycle, I'll almost make a bet with you that you will see incredible gains in that time. So it really depends on your motivation. If you just want to get involved, if you just want to get some exposure as an option on the future, as a stake in this digital real estate, I would say download a wallet that can be blue wallet or green wallet. They're not all named by colors, but those two happen to be, and they're incredibly good. They're very, very simple, they're very straightforward, but they're also very robust. You can download those off the App Store, and it will take you through, I think it's about 4 or 5 clicks and you're ready to go. Most of those wallets you can buy Bitcoin through. Otherwise, you can go to coinfloor.co.uk. I don't know whether most of your listeners are UK based.
At the moment, they're across 53 different countries. So it's US, UK are the biggest ones, but we've got all sorts of all across the world. So.
Okay. Well, in that case, I'd say as a UK purchaser, I would go to coinfloor.co.uk, which is the most liquid, longest running exchange. And I happen to know the founder personally, who is a very, very conscientious person and in it for all of the right reasons. And also they're Bitcoin only, which sort of stops people being tempted to have punts on other things that will, I think, undoubtedly lose them money. Bitcoin is the way to go. In the US, I would go to Swan Bitcoin. And in Australia, there's Amber. In mainland Europe, there's Relay. So relai.ch. Relay is possibly the best one of them all, because under 5,000, there is no KYC other than your phone number. So there's no tie. There's nothing to tie you to that Bitcoin. Whereas the others, they have to conform with anti-money laundering directives. I don't know how they are. There must be some specific Swiss legislation that avoids this. And then I would just get some skin in the game. I mean, nothing incentivizes learning as having skin in the game. And it might start off with €100 or £100, $100 in Bitcoin, and that makes you look at the price a bit more regularly. And as you see it go up, you might be more incentivized to read a bit more about it, whatever. So that is a very good way to do it. You can contact me on Twitter at hodler, HODLER, than thou. And I'm always very happy to DM with people. My DMs are always open. As an evangelical, I see it as my sort of missionary duty to kind of spread the word and help.
Any communities that you would recommend, any sort of forums that you get good information from?
Well, Twitter is mainly a dumpster fire, I think, but Bitcoin Twitter is incredible. The intellectual capital that is in this space is so humbling. You come into Bitcoin thinking that you might have been in the top of your class, or you might fancy yourself as fairly clued up, and nothing has humbled me more than being part of Bitcoin. There are some incredible minds, and they're from all areas. I have friends that are brain surgeons, I have friends that are responsible for multi-billion dollar hedge funds, and people like me who are sort of like just investors for their personal for their personal needs. But really the one thing that everyone has in common is that they are critical thinkers to the extreme, and they are disagreeable to the extreme. And I think in order to really unravel things, you have to be disagreeable. You have to be curious. You have to want to look at the flip side of anything that you are sort of presented. And so Bitcoin Twitter, but I mean, how do you access that? You have to kind of follow some particular people, and that will inevitably lead you to the sort of community. But you could start by seeing who I follow if you really wanted to, and you can see whether some of those voices, they resonate with you or not. And another sort of common denominator is that we are inherently apolitical. I think most Bitcoiners feel either scorned or disappointed, exasperated with the status quo of politics. The absolute ineptitude of sort of centralized governance, and want to try to find alternatives for all the ills that they see in the world. And as I've said several times, I feel like Bitcoin is the sort of fertile soil, if you like. It's the fertile soil for a lot of new, better frameworks to sprout and grow.
And you mentioned also that there are 4 books of enlightenment. Would you mention them for the audience?
Yeah, I mean, and this is to my own personal enlightenment, and even saying that sort of insinuates that I'm in any way enlightened. And I still I try to consider myself always the biggest idiot in the room, because if you at all ever think that you know anything, that is the pillow that will end up suffocating you and stop your personal progress. So it's just the 4 books that have really started opening my eyes. 2 of them I've already mentioned. Well, 3 of them I've already mentioned, in fact. So the Sovereign Individual. The Sovereign Individual is written by Jacob Rees-Mogg's father, which puts a lot of people off, because a lot of people, certainly within my circles, being an ex-musician, songwriter, producer, they have just decided that Jacob Rees-Mogg is the devil, and so his dad must also be the devil, and so they will not even give it the time of day. It's incredibly prophetic, this book. It was written in 1996, I believe. Basically predicts Bitcoin, predicts the turmoil we are seeing now, predicts the demise of the nation state. It is one hell of a read. It's maybe not the easiest read, but some of the ideas in there they're just really, really profound. Then there is the Bitcoin Standard, which is the Bible within Bitcoin, written by Saifedean Ammous, and it mainly focuses on monetary history. So how we developed money as a need for an intermediary good to kind of improve on the bartering system we had, because people will go through this, how do you end up bartering if you produce cows and you need apples? It's very difficult to facilitate trade that way. So and how that brought in feathers and pearls and yapstones, etc. And eventually touches on why we ended up on gold, why we ended up on the gold standard, and the frailties and weaknesses that gold has that meant that we left the gold standard, were able to leave the gold standard again. And that we now have the worst money of all time, which is a paper money that is based on absolutely nothing other than sort of the threat of state violence, if you like, and the confidence in the strong arm of your state being able to keep it together. And now not even really much of a paper, but a digital representation of a paper money that is based on nothing. And then the last third, I think, of the book, or last quarter, is about Bitcoin, and in the many ways that improves the tool that is money and what it will do for our society. And, I urge everyone to have a critical mind and question all of these things, because as a bit of a disagreeable so-and-so, I do that all the time. My first instinct is always to go, that can't be right, and then look into it myself. So I welcome that reaction to any of the information that I give. And the last book is Jeff Booth's The Price of Tomorrow, which has blown my mind in ways that not many books can. And that is basically about the deflationary nature of technology, the way in which that is going to change our world, how we shouldn't worry. I mean, almost like how some of the things we worry about now and we sort of put resources and intellectual capital into is sort of a null and void, because technology will take care of it. Incredibly interesting, and a book that needs to be read 4 or 5 times to really understand the nuances.
Well, absolutely, and I want to say thank you for distilling sort of your 6,000 hours into minutes, because it's been really interesting hearing the frailties of the global scale of where money is right now, and it's actually quite scary, to be fair.
Again, I used to feel like that until I discovered Bitcoin 4 years ago. I was incredibly pessimistic about the future. I mean, very optimistic about my own personal future, but very pessimistic about the future of the globe as a whole. But that has entirely changed with Bitcoin, and I feel like we have a bright dawn ahead of us. And I would just say to anyone that obviously don't trust and verify. Don't trust what I'm saying. Go and do your own research.
Thank you for listening to the Focus on Why podcast. I'm Amy Rowlandson, and if you've enjoyed this episode, please leave me a 5-star Apple Podcast review. Connect with me on LinkedIn, Instagram and Facebook, and become a member of my inspiring, uplifting and positive Focus on Why Facebook group. I help people to focus on their why with clarity, uniting their passion with their purpose with a plan, to create the life they truly desire. If you would like me to help you focus on your why, then please book a free 20-minute coaching call via calendly.com/Amy Rowlandson. And if you haven't already, please sign up for the Friday Focus weekly newsletter via my website, amyrowlandson.com. Have a purpose, have a plan, focus on why.